All right. So moving on to
On that happy note,
the biggest news of the day, Fitch. This thing I thought we were done with a week ago, it has come back. It is warned it may be forced to downgrade dozens of banks, up to 70 of them, including the granddaddy of them all,
yeah.
JP Morgan Chase. You might be thinking, how could this happen? How could they be downgraded JP Morgan Chase? Their argument is that the banks are in a bad situation. And as a result of that, we saw the regional banking ETF take a massive dump today, down 3%. TFC went below 30, KeyBank, Zions, all these stocks were down. And they didn't really recover throughout the day. I mean, there was a little bit of recovery, but then they just fell back again. So here's the question for everyone. Obviously, US banks hold a ton of confidence and support and infrastructure and significance to the overall US economy. Fitch downgrading US banks, 70 of them, is not good for the entire US economy. That's why we saw stocks all go down today. Does this matter? Do they have a reason to downgrade these banks? Are they doing it for political reasons? Or is this like this weird headline that they're putting it out there that says, we're going to downgrade you, but it really doesn't matter because you guys are the biggest banks in the world. So nothing's going to happen as a result of it over the long term.
Someone's late to the party. That's the problem. Someone's late to the party. They're using old data to make assessments today. They released their report. You ever ask yourself, man, these guys seem to always figure out that the shit has hit the fan after it's hit the fan, and then 6 months
after they got their returns.
You know, it's just the funniest thing. Like, remember 2008? Oh, the banks are all great, and then a year later, whoa, I think there's a problem. Yeah, motherfucker, we know. We saw the market drop. You know, like, so all these companies, I'm telling you, some of them, you just, the amount of I want to say stupidity, the amount of like, I don't even know what to call it, but it's like you're downgrading the US after they just jacked up $30 trillion of debt. Like, what the hell were y'all doing for the last 20 years when they were blowing through their fiscal budgets? You know, like, you didn't think at the time, like, hey, I think the US is maybe not, not doing so well politically. They didn't even downgrade us after January 6th when there was a fucking uprising. So y'all are doing this, what, 2 years later? So I have a hard time believing that these guys are anyway credible. And the fact that they're trying to downgrade JP Morgan, which is probably the most conservative of the banks out there and the largest by assets, is a little bit just like, hey, what the hell are you guys doing?
What do you think gives them the ball? What do you think gives them the balls to actually put that out there? Like, and have people take it seriously for JP?
They don't want to look stupid. If something happens, they don't want to look stupid. So, I mean, it's easier for them to re-rate higher than it is to say, hey, we missed it. Like, because they clearly missed it. They should have been downgrading these banks last year, saying, look, they're overexposed to credit risk and duration risk, right? If they're really doing their jobs, they would have downgraded Silicon Valley Bank. They would have downgraded First Republic the minute that the Fed started raising interest rates, and they were the ones watching them. What happened? How come you didn't downgrade them at the time, saying, hey, interest rates are rising, these guys are not protected? How come it took a bunch of Twitter people like myself to point that out to people, saying, hey, look at their balance sheet. 1 and 1 doesn't make sense. So yeah, congratulations for figuring shit out 6 months too late. I think this is a great opportunity to buy some really great banks at cheap prices. I know the hedge funds are probably doing the same exact thing. We're a bunch of guys like me, we're a bunch of vultures, okay? We're waiting to pick at the corpse. That's why I sold out of my TFC position when I spoke to you guys about it. And now
I gotta give Chris props today. He sold his TFC option spread at around $6. It has come down today, given TFC went below 30 at around $3.85, which is the average Chris and I kind of got in. So yeah, it was a good fucking trade. And now he can get back in if he wants, or even get back in lower.
I'm waiting now for the market to finally start bottoming, and then fuck it, I'll reload and go on and move past it. This is always the case, man. You're going to see rises and then falls, and then the euphoria starts to kick in. Everyone goes up, and it's just the market dynamics. But I can say without a doubt that fundamentally there is nothing wrong with the regional banks right now. A lot of this is just headlines, and that's perfect because I want people to be scared, so they sell me their shares on the cheap, right? So I'm patiently waiting right now. I'm not deploying a lot of capital. For my Patreon followers, I've been telling them for a month, just chill, sit on the cash, don't buy too much stuff. Like, I have a 30 to 40% of my portfolio right now is just sitting in cash, waiting to pick stuff up on the cheap. So hopefully we do that.
I feel like every year they come up with a different reason to justify the natural rotation from tech to value, and now from value to growth stocks again. I feel like as we're getting close to the end of the summer, we start automatically seeing some of this money start to rotate back in. We've like you said, frothy. We were real frothy for a while, and so money's going to start to come out of this. Yeah, there might be some of these catalysts, like you said, but if they're backwards looking, it's just justifying something that happens every year anyway. What year has this not happened with banks? Seriously.
This is also, speaking of historical stuff, August, every third year of an election cycle, historically, this is exactly what happens. Like, it literally down to the percentage we're down currently in August, every third year of the election cycle, which is 2023, it happens. And so I think, August, September, as a bunch of people have been saying, it's going to be choppy, and then we should see some momentum. But August and September are just not fun months for the market ever.
Well, what elections do we have coming up November?
Well, no, I mean 2020. So the third year of an election cycle. So 2024.
Right, but we had congressional ones last year. If there's any, I don't think there's any major. There's always an election, but I don't know if it's anything major.
There might be some mayor, some gubernatorial. I'm saying that
like
wrong.
some of those might be coming up. But yeah, typically I feel like what you do is you create sort of an artificial bottom to allow the economy to run up in the months before an election, because typically you want the economy. The incumbent president wants the economy doing well going into election. It's just never good, because I mean, who said that famously? It's the economy, stupid. Like, literally, just make sure everyone's got money in their pocket and people are feeling good, and it's a great tailwind for you.
Yeah, unfortunately, I think the saying fundamentals don't matter, that needs to die. Fundamentals always matter. It's just the time frame which you're analyzing those fundamentals, right? So when markets are overvalued, you want to look for the fundamental companies that are good, but you don't want to buy them. You want to just wait. And then on the other hand, when things are undervalued, but the fundamentals are still good, that's when you should be buying, right? Never buy stuff for more than what it's supposed to actually be worth, or at least try not to. I can't say that I don't buy overvalued shit, because I do. Like, if I see crazy potential for a company to grow their business, I throw away fundamentals and just say, you know what, I think the fucking product is amazing. And that's the mistake that I learned as an investor after a lot of time. Like, as an example, if you looked at the fundamentals of Tesla, you would have said this is uninvestable, which is what I did. I never invested in Tesla. But then when you look at the product, it's like, wow, it's a fucking great product. Eventually they'll figure out how to make the fundamentals work for the product, and boom, you've got yourself a great business. So I think, when you're investing, you have to look at both things. You can't be as rigid as everyone. Either you're like 100%, I'm all going to be value based only, and I'm only going to go based on value, because otherwise you'll miss out on a lot of growth opportunities. And you can't be all growth and invest in the future, but forget that sometimes the market will come after you and they'll take your company down. So right now, if you look at my portfolio, it's balanced towards growth with franchises like Wingstop. I know that sounds stupid, but trust me, they're growing.
Oh, you're in? Crazy. You're already in? You're in the company?
Yeah, I have a little bit of Wingstop, but like I said, I'm slowly adding to the position. Same thing with Google. Google, I think a lot of people think is Google is actually one of the best investments that anyone could make right now. The reason why is because they are a growth name with a valuation, which is unheard of. That's usually not the case. In terms of like relative to their peers, their value right now. So if there was one company that I would say that it's a buy, no matter like what the economy is doing, up, down, left, right, is Google. And you can see it's holding its levels pretty solid right now. So